Bitcoin fails to produce a block for more than 1 hour. Chainlink is in the top 10 list of most purchased tokens in the last 24 hours. Quant price reaches a 2020 new high. Is $300 incoming? Near platform active users increase. Sweat economy boosting the token's price. While it lost 94% in value since its collapse, Terra's fractured ecosystem is still worth $2.5 billion. Survey 98% of CEOs preparing for US recession, confidence at lowest level since Great Recession. Economist Peter Schiff warns Fed action could lead to market crashes, massive financial crisis, and severe recession. Solana's top NFT marketplace no longer forces traders to pay creator royalties after rival upstarts cut into its market share. Hello, everybody, and welcome to the Assets of Value podcast. Today, on October the 17th, and every day, we connect to give an industry's insider's perspective on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization. Our podcast is not to be taken as legal or financial advice. Let's dive straight into it. Abhay, how's the market looking?
Hi Shubham, good evening. Bitcoin is finally seeing some price action right now as Bitcoin has pumped to 19.6k from its sluggish 19k region. I think this is a really good positive sign as we see multiple on chain supports for Bitcoin. Number one, we have seen whales entering a big long position on Bitcoin. I think the market is nearing a bullish rally, at least for the remainder of the October. And in Bitcoin dominance, we are seeing a hike from the last week. I think this can hurt a lot of high cap altcoins. As we can see, Bitcoin has pumped almost 2% and alts are lagging behind. For example, Solana has pumped just 3%. The low cap altcoins are a different category. We see multiple coins performing 50% plus.
Brilliant overview, as always. Thank you very much. Positivity is still yet to come. Small price movements on a Monday afternoon. Let's see where it's going to close out for the session today and where price takes us. Circling back to the stories, there's quite a few that we've got to unpack. Where would you like to start?
Oh, let's start with the Bitcoin failing to produce a block for more than 1 hour.
Yeah, so Bitcoin, decentralized network that it is, already declared as a non-security by security exchange commissions in the USA. So Bitcoin failing to produce one block for over an hour. How is this possible when there's miners spread out across the world? I thought that producing blocks was all part and parcel of the blockchain. Why would it be failing? Why would it be on hold? I mean, we've seen that case in Solana, but never with Bitcoin.
This is one of the rarest occasion in the crypto space. Bitcoin usually produces a block in 10 minutes and there's an average gas fee of around $0.3 to $0.4. That's the standard, right? But unfortunately, we have seen this dilemma between miners for over an hour, which should be at least 6 blocks. The miners didn't add a block. Or we don't know what the reason is. I'm waiting to see an explanation from the miners side because we know that majority of the miners are connected. They are well connected with the exchanges. So this might be a concentrated, coordinated effort. So we'll see. I'll unpack some on-chain data tomorrow.
So, according to the headline, 13,000 transactions were stuck in a pending state. I mean, what happens when a blockchain transaction is waiting or is suspended, so to speak? When everything fires up, do those transactions get completed or do they get revoked and reverted back?
Oh, usually it gets completed. In the case of Ethereum, we know that we can send another transaction to cancel the previous transaction. And it might cost us a gas fee, but we can cancel the previous transaction if it's stuck. But in Bitcoin, there's no such mechanisms. So once your transaction is stuck, it's stuck. So it is quite unfortunate that it happened. Finally, all these transactions were included in the subsequent blocks.
Let's see what tomorrow's on chain data tells us and see if we can read into anything in there. Moving on. So, Quant reaches a new high for 2022. If I'm going to hold up my hands, I don't know too much about Quant, but you've been watching Quant and its kind of rise recently. Tell us more. I mean, was this expected?
Well, it was expected, but it was expected in September, to be honest, because Quant is essentially a novel ledger. You can see it's more of an infrastructure rather than a user specific, user centric blockchain. So, the biggest use case is that they can support the development and deployment of CBDCs or central bank digital currencies. I think the only trending narrative is CBDCs right now, and when CBDCs are trending, obviously Quant will attract a lot of investors. And right now, it has crossed the $200 mark.
So who's actually buying it? Because it's not retail. Retail have disappeared. Is it technology and partners that have now seen that it could be used as a backbone infrastructure play under the rollout of a stablecoin, a government-backed stablecoin? Is it getting some backing or won any investment?
I think it already has some investment, but the buyers, the people who are pushing the price, is not retailers, as you said. They should be institutions and other corporations. Any small buying, and by small, I am saying a size of 1 million to 5 million. Any small buying can lead to an exponential price action as Corn has outperformed every other coin. Corn BTC is at an all time high. I think it has broken the all time high already.
Yes, it looks like it has certainly made a new high for 2022. So, moving from institutional trading and price and investors, the Near platform has seen its users grow, and this is potentially down to that sweat economy, could be potentially boosting the token's price. This is weird because I thought that retail market in terms of crypto investors, speculators, users had actually left, but it seems like the Near platform is still capturing a lot of interest.
It's weird for me because Nia has been the slowest developing chain in 2021. It's not still in par with Solana or Atom or Polkadot in terms of development, in terms of active users. And if you have used a Nia protocol, you know the wallet is not user friendly. Basically, the user experience is lacking. But there are some serious players betting on the Nia ecosystem. But I think it has more to do with the user adoption rather than price action because the coin sweat has not performed till its launch. Near protocol, the price has not performed recently. And I think it has much to do with user adoption and which will obviously reflect in the next bull run.
That's interesting. It's really interesting. Definitely one for watch. I think there's a massive hope for the Near platform and its ability to kind of take on and be considered as a big player within the ecosystem. Now, moving over to Terra, you could almost squarely point that Terra actually caused the start of the decline of crypto. That ecosystem still worth $2.5 billion. Is that for real?
It has to be real. But most of this TVL is in Anchor Protocol. Most of the TVL we are seeing is of old players. I don't really see a future for Terra. It has not performed and it has not delivered on its promises. And it has a bad influence and bad impact on the existing crypto investors. So, in a way, Terra is also responsible for the decline of crypto. I mean, the rapid decline of crypto. And the ecosystem might be just trying to get some more exit liquidity for the early VCs.
We'll have to watch this one as well. I'm surprised that it still got that much value locked in and the Anchor protocol still around. Obviously, there's some heat on Doc One. He's squarely being held responsible for these deaths, or certainly wants to be put onto trial to understand his involvement and what could be avoided. Moving on, many CEOs are preparing for a US recession. As high as 98% of them believe that confidence is at the lowest level since the Great Recession. I mean, that's a huge number to say that a recession is coming, and the fact that it's a global recession and CEOs are now only preparing for them. There was talk that we were actually going to have a soft landing and come out of this pretty soon. What's your take on A, the recession, and B, the length of the recession and this bear market?
Great question, Shah. A recession is technically two consecutive quarters with falling GDP percent. Technically, it's not that scary, but a recession is scary for investors and bankers. So, what happens is that when a recession comes, when these technicalities surface, all these private companies are going to lay off their workers. And when you have this employment crisis, then the economy responds badly. So, this is a death cycle, a death spiral. So when 90%, around 93% of CEOs believe a recession is coming, it will be coming. That's the unfortunate thing about it. Because when a lot of people believe something is coming in a macro market, will probably happen. Because I mean, the 93% of these CEOs will be preparing for a recession. They lay off workers, they'll cut down their operating costs, they'll cut down their marketing costs. Because when you are offloading developers, who I think developers are the ones who are commanding a sizable portion of expenditure, so they'll first try to offload a few developers, and when you offload developers, obviously the development activity comes down and the protocol growth decelerates, and that will impact the overall health of the crypto market again. So you see, this in turn is forming a vicious cycle that will impact each other. When crypto market falls down, the length of the bear market will extend further. And when the length of the bear market extends, there won't be people who can hire developers. And it will continue for maybe 2 years, maybe 3 years, who knows. But I'm hoping to see a full fledged bull market in 2023.
I could certainly say that all markets and all industries will be affected. I think this tightening is already in play, and I think it's going to continue to be in play for the foreseeable. Two consecutive quarters, yes, where CEOs are preparing for a recession on par with the Great Recession, then we've all got to stand up and take note. I mean, Peter Schiff has come out again warning everyone that the Fed action could lead to market crashes and a massive financial crisis, piling into the thinking of a severe recession. I mean, Peter Schiff has been pretty negative all the way, and no one can actually trust the Fed's control or lack of controlling inflation.
Yeah, I agree. Peter Schiff has been a pessimist on Bitcoin. He has been saying to the world that Bitcoin is going to fall. I won't give too much credibility to Peter Schiff when he talks about Bitcoin or cryptocurrencies, but when he talks about general market, general sentiment, macro market, I would certainly listen because he's a well-known economist.
Indeed, he is. I mean, shifting over to general market, if we have a quick look in the NFT space, there's movements going on there where platforms are competing for their market share. Magic Eden, the largest NFT marketplace on Solana, no longer requires traders to pay creator royalties. So this has been a hot topic of late, where much discussion has happened. Should royalties come to zero? Is that a good thing or bad thing? My take on this is it's good for traders because they're not paying any royalty fees, and they can move and flip between collections without paying higher cost. It's bad for creators and artists because it doesn't support them. Magic Eden, to try to be on top of that and still stay relevant and competitive, has now implemented an option to say that a buyer can opt in to pay royalties should they choose. Is this a good move, do you think? A platform putting the onus back on users?
I don't think it's a really good move for artists and creators. because they are losing out on the royalty fee. Because you know that most NFT projects are sustained by the royalty fee. And in terms of collectors, in terms of NFT traders, they are saving a little bit by not paying royalty fee. So it's a 50-50 situation right now. We might see some severe backlash on NFTs if they completely avoid royalty fees, because then the artists are going to Ethereum for publishing their artworks.
It's definitely one that we're going to be tracking. NFT moves at a lightning pace, and what's in trend today could be out of trend in a couple of days. As always, it's been super fun. I'm glad you were able to jam with us today. That's it. Until next time, thank you, everybody, and we're signing off.